Now for a quick disclaimer. Nothing you see or hear on the flight deck is investment advice. Nothing said today is intended as investment advice. Those participating in today's discussion may have bought, held and/or sold the stocks discussed today prior to today's discussion and/or may do so afterwards. Remember, you are responsible for your own investment decisions, and if in doubt, you should seek advice from an independent financial advisor. Stocks can be high risk, and you may lose the entire amount you have invested. Please now sit back and enjoy the flight.
Hello. Today is Tuesday the 27th of May, and welcome back to the flight deck. On the call, Alaskageophiz, we have Robito, and Sporazene is joining us. So welcome, guys. How are you all doing?
On the road to recovery flight, yeah.
Yep, I've been helped by Aberdeen's Cup final win at the weekend, so life is good in the north of Scotland.
And Alaska, I hear you've been battling bears this week.
Yeah, we had a nice big black bear in my outdoor shed. It got stuck in there after we trashed it and couldn't get out. So we heard banging, figured out what it probably was, and pried the door open and then let it escape with my heavily armed neighbors watching to make sure we didn't get eaten.
Gosh. Well, here we are, folks. We cover Pantheon Resources on the flight deck. The market cap currently of £282 million, $380 million. We've had a number of things that's happened in the Pantheon story, so we're going to go through it now. Some good, some not so good. So first of all, Max Easley, new CEO appointed, who came in to replace Jay Cheatham. Jay was appointed to Pantheon some 17 years ago. So first of all, at the start of this episode, I'd just like to add my voice of thanks to Jay and wish him the best for his retirement.
Yeah, I mean, all the best to Jay. I know I heard, I think David told us at the AGM that he occasionally listens to the podcast. So hats off to you, Jay, for 17 great years at Pantheon. And I guess thanks for all of your efforts over the years. There's been some up and downs and resilience that you've shown to get through some of the downs and put us in a great position here for the future. Thank you, Jay.
And then Max Easley has taken the position, and Max has over 30 years' experience as an energy executive, domestic and international in the upstream industry, and with the executive roles at BP, Apache Corp, and Petronas. A very affable character, very sharp. Great appointment, and looking forward to seeing him drive Pantheon forward. And Alaskageophiz, you knew Max from BP days, right?
Yeah, Max and I both worked at BP Alaska. He obviously traveled a lot more and was seen as a higher flyer than I was, which is a good thing. But Max also played on my hockey team for at least a short time, and we won a little championship one year with his help.
Oh, wow. So what was his position and what was yours?
I usually play center on there are 5 skaters and the goalie. And I don't play defense, but Max would kind of go wherever he was needed. So he sometimes played defense and sometimes played forward. But he's a pretty tall guy and pretty athletic. And his son used to attend the games, and he was a really enjoyable young kid.
I appreciate that you recognise you were speaking to British people about ice hockey there and pointed out how many players there is. So, but yeah, no, on the Max thing, I think, if you look at his CV, tailor-made really for the company in terms of his, obviously from Alaska, worked the slope before it, but also more recent times, being involved in unconventional production, basically. I guess we're just missing the production of oil wet reservoirs on his CV now, basically, but I'm sure we'll get to that later. No, but a great appointment and a great CV.
Great validation flight of what we have as a company, right? And for somebody with his caliber, and I think as David described in the at the AGM, it was a competitive process with some very strong candidates. So for us to be able to attract that caliber of leader, it was pretty reassuring from my point of view. I guess he's probably had a little bit of a baptism of fire here with Megrez one well, but be able to take us to the next level.
It's a good point on and Max having done his due diligence into Pantheon. He would have come and kicked the tires before his appointment, and you can just see him itching as an Alaskan to sort of get stuck into this resource for the benefit of Alaska and the state. I think he feels he's got a real contribution to make. So I'm really excited about it.
Well, you know how these things go. Like as part of the process, I'm sure he got to access some data under a non-disclosure agreement that allowed him to make his own assessment of what we have from a resource potential. So I think it's a great endorsement.
Right, so now's the time where you might want to join me in opening a beer, and let's sit back and talk through Megrez.
Oh, Pantheon, why do you always break my heart?
So Alaska, it was quite a surprising well. Initially, we got off to a flying start with a discovery and significant hydrocarbons in terms of oil-bearing reservoirs in those stacked horizons. And then we came to flow test. So perhaps you just want to kick off with an overview.
First of all, let me tell you a little kind of funny story. Typically, an exploration well, if it's successful, has tens, if not hundreds, of grandparents and parents that'll claim credit to it. While a dry hole will be considered an orphan, and no one will want to be associated with it. I think ultimately, as I talk through this, we'll find out that we're probably in the middle ground here. It's not as bad as it first seemed. So around November 11th, 2024, they spud the well. They drilled down 3,500 foot vertically from the gravel pad they put in, the Megrez gravel pad. And they built angle to about 51, 52 degrees and drilled a slant well using oil-based mud. And they had targets primarily in the upper Schrader Bluff, topsets 1, topset 3, and topset 9. When they got to TD, they had LWD logs. They kind of saw what they were seeing on the way down. We actually interviewed David Hobbs and Justin after they'd gotten to more or less TD. And we didn't know at that time they'd found some additional zones up shallow. So we talked through the topset 1 and topset 3 being pretty good. Topset 9 really it wasn't. Or again, we just hadn't gotten deep enough to get it. But they did some core, 60-foot hole core, and 49 of 50 sidewall cores were recovered. So everything was looking fantastic. They had an unexpected zone up in the upper and lower Prince Creek. And then they had Saginavertok, lower Saginavertok 1, 2, and 3, which again were very shallow. And as you go up there, you get into the non-marine, less depth of maximum burial. So we anticipated better porosity and permeability, which we have seen. So going back to the testing, I don't remember exactly when it started, but they were going to test from bottoms up as they typically would in exploration well. They decided not to do topset 3 because it was going to be very similar to topset 1, at least the rock properties and fluid. And they'd already anticipated they'd found about 2,400 and some feet of light oil gross rock as they drilled through the interval, which is amazing. And they said about 1,340 feet of that was considered net pay. And that's based on, again, it's just not shale or it's got the capacity to flow. So, that's amazing. That's almost a 50+% net to gross, which is really good. So they started the test. They did a 2-stage frac in topset 1, the upper Schrader Bluff. They produced for 12 days. They flowed back the frac water, which they needed to do because that's pretty much fresh water. And they didn't see much oil or any, significant oil. So they floated a little longer to make sure they got all the frac fluid out. And basically with the limited amount of facilities they have and trucking fluids, maybe 25, 30 miles up to Prudhoe, it was going to be expensive to keep it going when they didn't see much encouragement. However, again, the logs, the core, and everything they'd seen through the drilling cuttings had suggested there was light oil in the rock. And I'll talk through that a little bit also. So for that, they basically then went up and they had to do a cement squeeze, basically get the shallow zones all perfed or set up for basically doing some perfs up there. So they have to get the cement in the right spot to cover any potential pay. While they went up there, they went to the lower Prince Creek. They perfed that, and they were going to do a frac there, but they just decided to do a little swabbing, and they flowed about, I think it was on 200 barrels of low salinity water from there. Realized that, again, that might be similar to the topset 1. And a couple things here. One is they originally came up with an idea of a transition zone being the reason why the first deepest interval didn't flow. Transition zone is really where you have combination of water and oil in the rock. If you go high enough above the free water contact, you eventually get to irreducible water saturation. You flow what you call dry oil, basically, pretty much 100% oil. But in a transition zone, depending on how close you're to the water contact or the free water level, you basically can flow a mixture of water and oil. And Max talked about that in Rel Perm and basically said, well, we're perhaps close to the transition zone and we just don't have enough oil saturation, even though the logs suggested they did. So they did a couple things. They took the low salinity, they relooked at the logs, the RST cased hole log, and basically said everything above still looks like it's going to be higher saturations than what we just tested. So let's keep going up. So that's where they went to the Prince Creek Formation, which again flowed water about 200 barrels per day. The guidance pre-drill was that we're going to find about porosities in the 20 to 25% range, 5 to 35 millidarcy, and the flow rates for oil would have been about 200 barrels of oil per day in the lower part of the rock, and all the way up into the upper Sagnavertok might be as much as 2,000 barrels of oil per day. So again, they're still looking at the sidewall cores. They got saturations from oil looking to be about 50 to a little bit more than 50%. And that's really good. It's hard to explain how you're getting water, yet your oil saturations are that high. So they now come up with, instead of a transition zone, they think it's more of a wettability, so that instead of typical water wet rock you might find in a sandstone where the water clings to the grains of the sand and oil's in the middle of the pore space, it's the opposite. The oil's clinging to the rock and the water's in the middle. And again, when you have to flow it on a test, that water has to all come out first before you can get to the oil. So again, that's the reason they thought they were getting just mostly water. Then again, since they'd already done the cement squeeze, they went all the way up to the top just to see what would happen there. They perfed that, got 2,000 barrels of water per day, and realized at that point they've got an issue that they probably have oil wet rock all the way up and down the whole system, and that basically any further testing with exploration equipment, a well test kit, was not going to be productive. They need to have full facilities here to really do longer term tests.
They've discovered a very large accumulation of an oil wet system, as you've explained. But the prognosis pre-drill was that the permeabilities were conventional. Although we flowed water, that's played out pretty much as expected. In the lower horizon, where we did a proper perf and frac, we had 1,000 barrels of water produced. Then just in the single perf in the lower Prince Creek, we had 200 barrels. And then again in the very higher section, just with a single perf without a proper frac, 2,000 barrels again. So that's correct, isn't it? So the perms and porosities were as pre-drill, as expected. We just had this unlucky scenario where the reservoir's oil wet, not water wet.
Yeah, so I think you said a couple of things there that are important. One is where they fracked a tighter rock, and again, they've only shared a few sidewall core permeabilities. They were less than 1 millidarcy, so a little bit less than they perhaps expected. But with the frack, that basically allowed you to flow a lot of water. So again, like 1,000 barrels per day, I think was the thing for 12 days. So that's pretty high rate. When they go up and they don't frack, they're basically getting about 200 barrels of water per day, and that's the same type of rock, more or less.
Yeah.
Now, when they went all the way up into the non-marine, really good stuff, less 4,000 to 5,000 foot depth, basically they're getting about 2,000 barrels of water per day.
Yeah.
Now, had that been oil, that would have been an outstanding success.
And if they'd have fracked that and it had been oil, it'd have been off the charts, right? Yeah.
And they again probably wouldn't need to frack it ever, just to make a development well. A couple other things is this area is not too far from the Brooks Range, which is the mountain front that was pushing from south to north to create sort of the Colville four deep, basically where we're exploring right now with the light tight oil, Ahpun and Kodiak, as well as the conventional Megrez. And then there's another possibility, it's called residual oil zones, where you have 3 possible methods to make those. That's where the oil was trapped, but basically the oil has moved either because the trap has been breached and some of the oil has leaked out of it. Doesn't mean all the oil leaks out. The second is you can have a tilting of the regional rock that can basically shift the oil-water contact and leave some areas more wet than originally when the oil was in place. And the third method is basically aquifer influx, so that rocks exposed up in the mountains at the same geologic age, meteoric water, basically freshwater rain, snow, that water then goes into the ground, basically forms a groundwater flow going down dip towards the coast. And that water could have gone through the Megrez trap and washed some or all of it. Again, they haven't really talked about residual oil zone themselves, but they did talk about migration pathways and the wetness issue as being kind of the primary issues. But again, I've flagged that that's something they should look at, and perhaps they will someday.
Is there a reason why? Do we know why that's happened? Is that a geological framing that somehow water has effectively flooded through into the reservoir after the hydrocarbons had migrated? How does that sit? What are the options?
There's multiple ways. Again, I'm not particularly an expert on this, but the type of oil that has been put into the reservoir, if it's got a lot of asphaltene component, that stuff can want to adhere to rock grains. So that's one way to kind of make it more oil wet. Changes in pressure, temperature, the water coming through, especially low salinity water, can also have some effect on wettability. Now, there's ways to overcome this through the production methods. You can do CO2 flooding or miscible water alternating gas flooding to get to the oil that's clinging to the rock. You can depressurize it by just flowing a lot of the water volume out of it. But again, that takes, the surface facilities connected to something that can dispose of it adequately. You can do polymer flooding possibly.
So Pantheon to date have said and advised, their current advice is that there is no movable oil attributed to this well. But I think what everyone's thinking is if there's over 50% oil saturation, is it possible that in the future, given a better budget, a better capitalized position, that Pantheon may well see some value from this?
Yeah, absolutely. This type of oil saturation, the thickness, the net to gross, you've still got a ton of oil out here. And that oil, someday someone's going to figure out how to develop it, but they'll need some surface facilities and do a little bit more reservoir understanding to figure out what's the best way to unlock it. It's not something that they're going to go after right now, but whether it's Pantheon or another company that sees value in this, I think it'll eventually get developed and there will be a value in it.
Another company would not be dropping this. They'd be, working out how they could get it done. I was going to ask Alaska, how common are oil wet reservoirs in Alaska? I know they're produced elsewhere, and they're obviously much easier to produce. I understand when you've got higher oil saturations and you have mobile oil, so slightly, some reservoirs will be slightly different than what we got. But is this common in Alaska?
I can say I worked most of the fields in the North Slope and have never come across oil wet reservoir issues. And again, drilling with oil based mud versus water based mud, there's a bit of a interact with the reservoir just based on that, which can fool you a bit. But no, I hadn't come across that. Carbonates typically are more common worldwide with oil wet systems, and sandstones typically aren't. But again, there are ways to change wettability through the way fluids move through a reservoir, and that's, I'm guessing, what's happened to Megrez.
Yeah, no, it strangely makes me feel better just thinking that we've just been really unlucky.
God, what a roller coaster ride
It's been. Putting into perspective the fact that we've still got such a promising portfolio, and when we raised the cash to drill this well, the stock was down at 17p. The fundraising was done; it hovered around 17p for quite a while, and then the stock really started to get some significant momentum behind it in terms of not only the result of the Megrez well in terms of when we got to TD and the information started to come out. And in parallel to that, we had President Trump really getting his support behind the gas line project. And I thought it was kind of a downhill ride from there, to be quite honest with you. But you know what it's like at Pantheon, we never do things easily. And so it was a tough result. But after the top set one result, I think the company were probably still processing some information and came to a conclusion maybe which wasn't ultimately the right conclusion. So
in terms of the transition zone,
yeah, and so I still had quite a lot of hope actually that we were going to end up with a positive result from one of the remaining zones. that we were testing. I'm bitterly disappointed, by the way. No, no two ways about it. I think everybody involved in Pantheon bitterly disappointed. Shareholders, I'm sure the company are equally disappointed with the final test result.
Disappointment, that was the first thing, we'd all started doing maths and numbers of the size and thinking about resource sizes, and and rightfully so, because I think we were just really unlucky. I guess you sometimes forget how lucky we have been in terms of, we've got another 1.6 billion, potentially a lot bigger than that if we do a bit more exploration. I joked about it, we've lost the cherry on top, and the cherry on top maybe looked like another layer on top of the cake, but now we're going back to the big cake that we've got, and it wasn't that bad before.
So I'm just wondering, let me throw a question out here. So as shareholders, raw shareholders, if a company came in and offered for Ahpun East and Megrez and to take all that acreage, and let's say Pantheon retained 10% of it, if you were asked to vote on that kind of deal, what do you think? Would you go for it?
I definitely would be open to farming down a big percentage of that acreage to a partner that can kind of accelerate further appraisal and potentially development. Flight, I think in terms of capital priorities right now, it would be a long way behind Ahpun and Kodiak appraisal from my point of view, looking at the scale of that acreage and the type of sort of capital it would take to really prove that up. I don't really see Pantheon in the near future really allocating any meaningful capital to Megrez or Ahpun East.
I think that's quite possible. Again, someone else can see some value, especially one of the existing, perhaps, North Slope operators. And then, again, the people that bought the acreage to the east of where we drilled Megrez, Surprise Valley Resources, whether they bought it, the leases themselves, or they're doing it for another company, they still have the hope that maybe structurally they're a little higher. And again, if it was more transition zone than oil wet, perhaps they still got a bit of dry oil up there.
Yeah. Is there anything you want to say in summation on Megrez?
Again, I just wouldn't consider a complete write-off. It just take another company or more capital at some point to make it work. But the pad itself provides a gravel pad, whether it either helps us at some point or even the Alaska gas line for staging equipment and services as they build that pipeline. It'll be useful at some point.
Okay, so it was a disappointing result. I think we're drawing a line. Should we draw a line under Megrez? The company has currently. So let's move on. Back at Christmas time, we talked of two catalysts. There was Megrez. Well, we know the outcome of Megrez now. And then there was the AK LNG narrative, and that has only got stronger. We have the lead developer, Glenfarne, announcing today they're pushing for final investment decision 2025.
Today, great news today that's just been released about an hour before we started to record here, that Glenfarne have appointed Worley to do the engineering for phase one, so prepare a final cost estimate for the Alaska LNG pipeline in sufficient enough detail that would allow us to achieve a final investment decision for the pipeline. Couple of things from my point of view here. In the news release put out by Glenfarne, they talk about the fact that Worley have already working with them on the Texas LNG project. So this is a proven partnership, and I think that's really good news that they're going to hit the ground running here. They've already working together, so there's going to be no sort of familiarization between Glenfarne and Worley. They're just straight at it, and I would imagine that Worley have already had plenty of site of data, and we know that there's quite a lot of detail on the cost estimates that Frank talked about in the podcast that we did with him. So I think it certainly appears as though the existing material will allow Worley to hit the ground running. But to see Glenfarne go into writing today in their press release about their intentions to deliver final investment decision by the end of 2025, I think is just absolutely fantastic news. Remains to be seen what that does for our previously described timelines to deliver first oil, but I would imagine that those timelines are probably under review by Pantheon right now. So I guess all we really need is kind of a gas sales agreement, and that's one of the major missing pieces of the jigsaw. But I think once we've got a gas sales agreement, then this thing is not far away from final investment decision, which is absolutely tremendous. Of course,
Sporazene, before we move on from the pipeline, I just wanted your thoughts. My understanding is that Glenfarne, there was talk of the backstop before, and this was them having, getting paid essentially no matter what for the feed stage. But I guess they've waived that now, and surely that's a vote of confidence in the project.
You'll probably remember going back into 2024, there was quite a sort of what appeared to be a convoluted process to allow the state of Alaska to release the funds, and they had to present to a particular group that effectively underwrote those funds. And I guess subsequent to that, Glenfarne coming on board, they basically just waived the need to do the $50 million backstop for phase one, and are just effectively cracking on with feed for phase one per the announcement today. I think the progress, you got to take your hat off to Frank Richards and his team for the progress. I think the comment was made on the server today that it's just about 12 months since we signed our gas sales precedent agreement with the AGDC. This was still a one big monolithic project, and it was only subsequent to December 2023 that I think they decided to break the project into a phase one for the pipeline only. And I think for a $44 billion total project, which has got to be one of the biggest infrastructure projects happening globally, they're making tremendous progress and knocking down the milestones in really quick time. And I can talk from personal experience. I'm an investor in another primarily estate project in Europe, and the progress there compared to Frank and his team is kind of pedestrian, really. So I know that obviously Frank and his team occasionally listen into these podcasts. So it was great, obviously, to spend time with Frank in the last podcast. But they've done such a great job in pushing this forward, and I think to the point that I think you were making before, Robito, it's sort of on Pantheon now, really, to prove up that we can deliver gas into the pipeline in the DB1 well.
I'm just inserting an edit here to give an overview of the schedule of works for the W1 well, which spuds the beginning or mid-July this summer. Drilled by the end of August, completed with a multi-stage frac end of September. Flow tested October, November, December, with then additional long-term testing into 2026 to the end of March. So I expect the production type curve to be plotted with a high degree of certainty of the volumes of gas and oil by, say, the end of December, and certainly an IP30 rate the end of October. By the end of October. So I'm guessing Pantheon will give us updates as we go. It's worth noting that whilst Pantheon use SLB and Baker Hughes to model reservoirs, the AGDC, in entering the gas sales precedent agreement, commissioned Ryder Scott to do their own due diligence project on Pantheon's gas resources, and Ryder Scott assigned 2.9 TCF of technically recoverable gas attributed on a P50 calc basis. So once Pantheon's established a production type curve, I guess they can move forward then and underpin the gas sales agreement, which is a win-win for Pantheon and the stakeholders of Alaska LNG Phase 1. But let's not forget the main event, which is a 2C contingent resource of 280 million barrels of ANS crude oil in the Ahpun field, which is the first to be developed, as it's right next to the Dalton Highway and TAPS and the proposed route for the gas line. So, Alaska, over to you. Could you give us an overview of the what was previously called the SMD, now renamed the Topset, in the Ahpun field?
Yeah, back in the day, again, even when I was exploration manager at Great Bear Petroleum, we had seen on the seismic, the Middle Schrader Bluff, this nice topset feature, basically under the they call it the regional top seal, the A10 Decker D shale, floodbank shale. that looked to be a prospective thing. And then from seismic amplitude versus offset, it even looked more encouraging in certain spots. And they call a thing called the funnel, where some of this deltaics was coming from southwest to northeast, and others were going from northwest to southeast. So kind of coming in two different directions, one from the Brooks Range being uplifted, and the other one coming more from the Russia sediments that basically form the Nanushuk and all the other fields that are out to the west, similar Brookian type rock. So what W is going to do is going to be a little south of the Megrez well, I don't know, a couple miles perhaps, right along the Dalton Highway, about 1,400 foot off. They'll build a gravel pad, and they'll drill a well to the west. Now, we don't know exactly where they've targeted the bottom hole location because they haven't published that information yet. But they'd like, as Max said in the last webinar, to do a long-term production test, multi-stage fracked horizontal, about 5,000 to a 10,000 foot well, depending on how drilling goes. They would then also, prior to that, drill a pilot hole, probably to figure out the vertical succession of the rocks, know where to target, and what the fluids are going to look like. If there were any unexpected surprises, you would probably pick that up in the pilot hole. So once they have a good zone, they probably call this SMD, Shelf Margin Delta B interval. They'll kick off in the pilot hole, drill the horizontal, complete it, and then basically go in there with the completion equipment to do the frack. And
how many frack intervals do you think there'll be?
Well, we did about a 30 in the mile long LK number 2 well, horizontal in the zone of interest. So it could be anywhere from 30 to, probably not 60, but somewhere in that range of more than 30 to get the 2 mile length. They will have probably temporary well test kit at least there for a while. I don't know if they'll bring down the LK number 2 test kit. They didn't do it for Megrez, so they may not do it for this operation. But what they will do is they'll flow it. And again, you've got the Phoenix project that 88 Energy has just to the south of there. They tested the SMDB. They got, I don't know, a small amount of light oil there, 38 to about 40 degree API oil, so really good stuff. We have the pipeline state well. They did some core through that interval, oil over the shakers, I believe. And then we had the Letha well where they tested bottoms up. So they had oil in the basin floor fan. They had a slope shelf system, and then they went up to the SM shelf margin delta. They flowed it for a little bit, but then it seemed to block off, and they weren't sure quite why, but they had to get the rig over to drill the Theta West well. So they moved off before getting a really good test in the SMD shelf margin delta interval at Talitha. So they know there's light oil there. So this is going to be the light tight oil stuff that we're all anticipating is going to supply the gas line contract. So they'll go out there and test it maybe 60 days, 90 days, get the rate. And again, if they want to, they can try to keep getting extensions for flaring, and they'll just get a good production profile, know the initial, like IP30, initial production for 30 days. They'll look at the decline and see what it looks like. And again, they'll get CO2 measurements. They'll get natural gas liquids coming out of the gas, measurements on that. They'll get all the information they need. Make someone like Ryder Scott, who did the initial assessment of Pantheon's resources for the gas project, more comfortable.
And with the longer term production test and type curve that's been proven, do you think that, again, with that new data, that could upgrade the resource further?
Well, certainly you're going to get some new data. You're going to get some thickness. You're going to get some reservoir properties. It's a better porosity, better permeability. Porosity has a direct relationship to oil in place. The saturation she's finding in the well, direct relation to oil in place. So things could grow. They could also go down a little bit, perhaps. But it will give another piece of data so that they can make a more broad assessment of that full resource assessment. So right now it's about 286 million barrels of sellable liquids in the Ahpun West interval, 6.6 trillion cubic feet of gas over both Kodiak and Ahpun. Yes. So they'll refine that information. The gas oil ratio, very critical information. So that'll tell the developers how many wells you actually have to get up to ultimately this goal of 500 million cubic feet of gas per day for sales in the agreement. Now, the south central part of Alaska doesn't necessarily need all that 500 million, but they might need 200 million or plus. But if you get more, you then have Agrium and other Nutrien, I think, is the new name for the fertilizer company. And these are all things that you can sell the gas to at the agreed price.
Yeah.
You touched on, some of the history. I know we've obviously done flow tests in the vertical at Alkaid-2 on this reservoir. You commented on we did it in Talitha, but I think they're expecting slightly better reservoir quality. I mean, those two wells were, I guess, on the fringes of the SMDB. Is that correct? And but what they do have is full core out the pipeline state one well, which will be closer to the Doobie well. Is that correct, Alaska?
Yeah, that's correct. And again, goes back to they haven't shown us a lot yet of the potential well location and how that fits relative to the amplitudes they've mapped, how it fits to structure. As they drill a more or less horizontal well, will they stay in the same particular sand, or will they be cutting through several sands, or will they have to steer up and down to make it map the structure? So until we get a little more information, it's a little hard to say, but they will definitely be going to, at least on the seismic amplitude, the direction where it's looks to be better reservoir.
So there is a picture on the Pantheon website of the Ahpun West Topset Reservoir, and it's sort of one of those color graded pictures. And this is the Miller Darcy Feet picture. Yeah, and so it looks like basically the best permeability is kind of pretty close by the Doobie 1 well location. Obviously, there's no scale to these maps, but if the assumption here is right that this Miller Darcy feet shows the better permeability in red, then it doesn't seem to be that much of a stretch to say that they've picked the Doobie 1 well location to really target the best reservoir.
Well, I'm glad you brought that up, because I was doing PowerPoint magic the other day with making two figures, one transparent so I could overlay it on the other, since I don't have them making the maps for me. So I took that particular figure you mentioned, which is called Miller Darcy feet, and it went up to, I think, 100 at the top of the scale. Yeah. So when we're doing meltwater tarn type drilling, we might have 200 millidarcy feet or 300 millidarcy feet as a criteria for keeping a well we drilled more or less vertically. And so that's way above the scale that we're talking about. But again, that was more conventional type rock. So they were in sort of, I think the reddish color was maybe around 40 or 50, something like that. I can't remember exactly.
It's right, 23 up to about 30. Yeah, 23 okay. Up to 30.
And it was very close to the road. I think, again, when I overlaid the W location with that, it was actually looked like it was in sort of the 2 mile range, if not closer. But remember, that's millidarcy feet. So they're taking two things. They're taking permeability. They've either seen from core data, or they're taking basically the DMAX story and saying at the top of the shelf margin delta, we have this formula that says this is kind of regionally how we think permeability is going to change with depth. So deeper the depth, more likely it's less permeability, shallower depth more. But I think the magnifying effect on that is the thickness of the reservoir they've attributed in that multiplication. So you got permeability, you got thickness. So as you went to the edge of the shelf margin delta or the funnel, basically you got thicker reservoir there. So I think that's creating that sort of sweet spot you see on the figure. Now, if you overlaid, which again I'm still trying to do, the original amplitude maps, I think you'll find that some of that's farther to the west. It'll be interesting what Pantheon says in the next few weeks about their drilling location.
If I was playing devil's advocate here on behalf of the AGDC or the stakeholders of the gas line, I think I would want this well to be like a normative production well, so just representative perhaps of the acreage rather than sort of shooting it into the best spot. That to me,
yeah, I agree. If you can make the sort of the median to the low side work,
yeah,
you only know it's going to get better for the gas volume. So there's multiple sands in here to look at with a frac, extending maybe a couple hundred feet vertically, kind of up and down. You can potentially contact maybe multiple sands, or they could put a bigger frac in there to get across more zones. So, I think they'll get enough information to add to the story. There's always some risk to it, but they have to drill this to get the facilities to do the long-term test close to the road. And then it's a question of drilling rig capability. How far do they want to go away from sort of the vertical well location?
Yeah, and as you drill more and more production wells, some are going to be better producers than others.
Yes.
Yeah, so I think going for something that's representative makes sense to me.
We saw that I think in some of the Schlumberger, they did run some of the type curves, and I think the company previously shared some of the range. I think it was between 1 million on the low side and recoverable in 3 million. But I think as well, and guys, you can correct me if I'm wrong, that the type curves that they have put out, that was based on the findings at Alkaid-2 in the verticals. I think at the time they said they're only assuming they're going to get what they've seen, basically. So I think the modelling at the moment is being based on what they actually saw Alkaid-2 opposed to what they expect in the heart of the reservoir.
And if nothing else, they've now got another gravel pad at Megrez. They're going to have one at Dubby. They have one already at Alkaid. So, for quicker development, they've got a number of places they can drill depending on what's optimum. The only question then becomes where's TAP's tie-in. They've said that's 2 miles north of Alkaid, and if they keep that, as they said, basically some of these wells to the south are going to have pipelines to basically take to the north to get that oil and gas to basically where it taps into either the Trans-Alaska pipeline system or eventually wherever they need to put it into the gas line.
Yeah, so just you made an interesting point there. So the Megrez pad could actually be used as a production pad to develop the SMD.
On that point, Flight, I think David Hobbs mentioned words to that effect on the last webinar, how that getting that gravel pad down could speed up, on the production side for Ahpun West, although it obviously was put down for Ahpun East at the time.
Yeah, and the LNG map that shows the permit location for the pipeline runs smack dab through the Dubby little road between the Dalton Highway and the pad. That'd be interesting to see how that actually gets put in a buried pipeline there under a established road, or maybe they jog around it somehow and have the flexibility in their permit to make it go a little farther west when they're burying the pipeline.
I mean, I know as well that we've obviously got to get through the flow tests and drill the well, but I've been pleased recently with the company talking more about break-evens, and they're talking about $25 break-evens for this reservoir, which is still, compared to other onshore USA, is really commercial, So.
Yeah. Okay, guys, let's just turn to funding. But where do we see things heading?
Well, it's kind of 150 to first oil, isn't it? And then another 150 to financial self-sufficiency post FID. That's what they outlined, I think, in the last webinar. And they think they'll be able to get debt financing of 250 on the back of the gas sales agreement.
The path of least dilution for shareholders. I think the company are kind of at pains to sort of state that we're aligned, and so if the gas line opens up that debt-based funding for Pantheon, then great.
Yep.
Up to was it 200 or 250?
I've seen 250 before, but I think Max has even mentioned the number up to 300 in one of the recent interviews. And the other funding piece, obviously, I mean, to be fair, they have been quite active in a number of conferences recently in presentations, and it's interesting that they weren't really pushing Megrez. They obviously understood that it was still a prospective resource at that point. So, a lot of the future investors, possibly in the IPO, are more familiar with the core story than they are with what we've been familiar with over the last year, which has been the Megrez focus.
So, do you think a US listing is likely into 2026?
Well, I mean, if you believe the company, then yes, I do, because I think the reiterated dates, I think was early next year in the last webinar. So yeah.
It's a US resource, so it just makes sense.
And they still need to raise the capital to appraise the Kodiak acreage, which obviously is vast in terms of the 3C potential over there. So they will need to access capital one way or another to do that. I think an IPO may well provide them some capital to close the gap between funding required to first oil if they're not able to access it all through the gas sales agreement. So I think if obviously they're successful and they're able to close that gas sales agreement, it certainly gives them the profile to probably attract the best possible outcome for the IPO.
Exactly. That means Sporazene, you forget there's another potential billion barrels of upside being identified at Kodiak.
Right, and I think I'd be surprised if they find enough gas in the Ahpun field to fulfill a 20-year gas sales agreement. Right, I think the concept all along has been that they'll deliver gas from Ahpun in the early years and then transition into Kodiak in the later years. They're going to need to appraise that portfolio at some point in the near future.
At which point, for Pantheon, it opens up another incredible upside of between 1.5 and 2% content helium. I'm just going to leave it there.
I'm laughing as he's going to mention helium. He's going to mention helium.
Oh dear. For me, Pantheon Resources could become a legacy investment in the portfolio. We have ups and downs. It was exploration in Megrez, and we've taken a hit with this result, but the already confirmed 1.6 billion barrels of resource hasn't gone anywhere. And with the gas line multiplier on its FID later this year, 2025, will be transformative for Pantheon.
It is Flight, and I would say things are getting real now. Obviously, Glenfarne came on board. The definitive agreement was signed with Glenfarne. We heard them committing to some accelerated timelines in the town hall meeting. We've seen it again today in writing. They also made reference to the fact that they were accelerating conversations around identifying a strategic party for the whole of the project to support them with the delivery of that. So that sort of implied to me that in addition to more deals like the Worley deal for other sub-projects, they're also looking to partner with somebody at kind of the program level. Governor Dunleavy talked about putting some gas in the pipeline in 2028 or 2029, which is 18 months or 2 years earlier than had previously been committed. So the momentum here is absolutely huge. It really is. The trade deals that are going to be done within the next 90 days will have some kind of commitment around the LNG offtake, right? So if you think about some of these countries like Vietnam, and I hear India potentially is going to be the first trade deal, the level of tariffs that these guys have gotten, particularly where they don't have a lot to bargain with, I mean, signing up to an offtake on Alaska LNG might be the only way that some of these countries, particularly like Vietnam, might be able to offset higher tariffs. So I would have thought that there'll be some commitment on LNG, whether it's up to 100% of the 20 million tons per annum or not, who knows? But I'd have thought before all of these trade deals are out of the way, we'll see some more countries signing up. Whether Japan signs up or not, who knows? They have been very, very coy about it, but I think at least another country or two might.
Well, the Nippon Steel and US Steel tie-up looks interesting. That's been all over the news this week. I mean, obviously, you can have a significant amount of pipe and steel to produce. Great stuff. I think we'll leave it there. Thanks so much, guys.
All right, good one.
Yep. Cheers, Flight. Cheers, everyone.
Thank you from all the crew here at the Flight Deck, and hope to see you soon over at Flight's investment server, sharing industry insights for the good of all.